That was funny. I'm in the middle of taking it. Dad. Stop. How many questions left? I only have 3 questions left. Yay! It's going to take me like 5 million years to answer 3 questions. Yay! Stop. That's 1 question done. That's another question. That's another question. Oh no, I haven't answered this one yet. I did answer this one. I did not answer this one. Okay, so this... This one will be much easier than this one. Oh, wait a minute. At least this one I don't have to do, I don't have to calculate the tax. All I have to do is calculate taxable income. But still, this one's going to be much easier, but it's still going to be hard. And weirdly enough, this one might be the hardest one out of all 3. I don't know. Now, I think number 7 is going to be the hardest one. This might be the second hardest one, because the problem is... Oh my gosh. So let me guess how I'm supposed to do this right here. Accrual method is used. You calculate your interest expense. Interest accrues for 19 months through December 31st of the next year. So the question is, how much of this interest is going to be counted as a deduction? Now, also, there's going to be some liability insurance. I believe in both cases, you have to just calculate the amount of interest that is accrued over that period of time. You can't use the amount that you already paid. You have to use the amount of interest that is accrued. I'm going to look this up, but I believe that is the case. So we're going to go to accrual. We're going to go to interest. No. Oh my gosh. That was funny. No, that was funny. Expense. So this is like an estimated thing here, economic performance. What about interests? What about insurance? Hold on. This is talking about liability insurance. This is talking about interest expense. This is interest on a loan. Dude. Payment liabilities. Oh my gosh. What about payment for interest on a loan? Where is it? Insurance provided to the business. Okay, so this is going to be insurance provided to the business. Hey, what about dang. Don't they talk about interest expense here? Dude, interest expense. Here we go. What? No way. Not deductible until interest accrues. You charge as it accrues. You charge interest expense as it accrues. You charge interest expense as it accrues. So that's how you deal with the interest expense. The insurance is going to be different. What they said for insurance provided to the business is that you actually recognize the amount that you paid for right away. Payment liabilities. It says that insurance provided to the business. This is insurance provided to the business. Therefore, you recognize it as you recognize the only when you paid the liability. Okay, so interest expense as it accrues. Insurance provided to the business when it is paid. Whoops. That is what I'm getting. That was funny. So therefore, it's going to be 280 times what? Interest expense is as it accrues. Wait, is that the word they used? Yes. Stop. That accrues evenly over 19 months, $120 per month from June 1st of this year to December 31st of next year. So, therefore, you are going to recognize $120 per month. Oh, you know what? We're going to do 120 times how many months have occurred this year. June 1st is included, therefore it's going to be 7 months. If June 1st is included, it's 7 months. Or if the month of June is included and to the end of the year, it's going to be 7 months of the year. What is 120 times 7? That was fun. $840. Oops. Therefore, when it is paid, therefore you recognize the full amount of insurance that you paid. $2,700. It says right there. It says right here that payment liabilities. Right when you make the payment, that you recognize this. So $2,700. So there you go. What is going to be deducted? So 840 plus 2,700 equals 3540. Okay, that wasn't so bad. I mean, it was kind of bad because I had to look up stuff, but once I knew what it was, that was funny. Dude, I only have 2 more questions. I'm actually making progress. That was funny. Stop. I only have 2 questions left, and I know what to do for both. It's just that one of them is going to be extremely hard. Oh, man. Only number 6 and number 7 are the remaining questions left. And number 7 will be hard. Number 6 will also be hard, but it won't be nearly as hard as number 7. That was funny. Because this is fairly straightforward. Qualified dividend. Okay. So $10,000 of the income will be taxed at a certain amount, and the other rest of it will be taxed at another amount. That was funny. Tax rate schedules, long-term capital gains tax brackets. Okay, you know what? For this question, I might just copy and paste into Excel and do it in Excel anyways, because there's just a lot going on. Well, you know what? It's not that bad. Like question 7, maybe. Question 7, he is the only one where he says provide a file to answer this question, because he probably realizes it's just going to be easier because there's so much stuff going on here that it would just be easier to do it in Excel. So, you know what's hilarious? For my first 3 accounting classes, I didn't even use Excel at all. For all 3 of those classes, I didn't use Excel for 3 classes. And it just finally occurred to me that it's so much easier to use Excel. Like, I was kind of forced to use Excel for business analytics, and that got me more refamiliarized with it. And now that I'm using it so much for that, I realized like maybe 2 or 3 weeks into this semester that it's just easier to do everything in Excel. That was funny. As I do most of these questions, not in Excel, but still. That was funny. So we have 68,450 minus 10,000. I could have done that in my head, but too bad. Too bad for me. It's literally just change it to 67,000, you moronic. I can now kill myself. That was funny. I meant 58,000. You've got to be kidding me. You've got to be kidding me. See, that's why I have to use a calculator. What do you call the other one? What do you call not ordinary income? Capital gains. Do you call it just qualified income or what? Man. Oh my gosh, you know what? It's more complicated than I'm thinking here. Oh no. Please don't tell me that it's gonna be complicated. Oh no. I just realized if he might do this, he might do this. He might make it to where the qualified dividend pushes the income into another tax bracket, which is going to be so annoying to deal with if that is the case. No. You've got to be kidding me. No, please don't do that. Please. Where is it? Dude, where is it? Dude, please don't do that. Are you gonna... Preferential tax rates. Okay, we need to figure out something. That was funny. That was funny. That was funny. I need to figure out whether or not we need to look at the tax rate schedules. That was funny. Please tell me it's not going to cross tax brackets. So we have 58,450 for head of household. Okay, we need to just look at capital gains. Oh wait. Capital gains and qualified dividends. Thank goodness. I think we're... Oh! Oh no! We're gonna... Oh wait, I think we're fine. Because it was at 58 and then it went up to 68. So it went from 58 to 68. That's both of those are within 15%. We don't have to do complicated stuff. Thank goodness. We're so lucky. This is for 2020, right? Or 2022. So we don't have to do complicated stuff. So we just have so we need to look at head of household. We need to make sure we're looking at head of household. So, dude, imagine if I X out the quiz and it loses all my work. That would be awesome. Dude, it could lose all of my work. Okay, so if that happened, I could look back at my previous videos and see what I typed in for the answers. So there you go. But still, I don't want that to happen. I mean, shouldn't it like automatically save all my stuff? Like, it's not going to delete stuff. It's going to have to be saved, right? It says I've only been working on this for 50 minutes, and I'm already almost at the end. Not really, but still. Taxable. Well, this is going to be... I want to go back. I want to go back to that one page. Taxed at ordinary rate. We have base tax. Oh, we're just going to go here. I should have memorized the page number. Well, it's not like I can just go to it, but that was funny. It's head of household. That was funny. We have head of household. We're looking at head of household. The quiz says head of household. It's head of household. That was funny. We are going to be talking about the rate that is taxable income in between $55,900. It is in between $55,900 and $89,000 something. So it's going to be equal to, the tax is going to be equal to 4807.5, 4807.5 So it's going to be 4807.5. It's going to be, that was funny. You know what? I'm just going to copy and paste this. Oh, come on. It won't let me copy it. Plus 22% of the excess over. Okay, so it's going to be plus 22% of what? 0.22% of what? So it's going to be of the excess over 41,775. So it's going to be 58,450 minus 41,775. It's going to be 4807.5 plus 22% times the original amount minus 41,775. So so we're going to have $4807.5 plus 0.22 times 58,450 minus 41,775. So we have 4,807.5 plus 22% times the excess over that. So it's going to be 8,476. And then we're going to have $10,000 of income is taxed at preferential rates. Head of household, we are in the 58,000. So we have 15%. We have 15% of the 10,000. That's fine. Because that's how it works, folks. Yeah, I know. Because basically, it's like 17,000 words. Stupid number 7. I hate number 7. It's 6 points. 6 points is not very much in the grand scheme of things. That was funny. Dude. I just need to answer number 7. Oh man, this is going to be fun. Dude, can I copy and paste all this text? It might be kind of blah to copy and paste the text. I think what I'll do is actually take a screenshot of the text. So we're going to do Control minus so that we can fit all the text in here. Looks like we can fit all of it in here, like right here, so Number 7. So we are going to do Nah, you know what? I'm just going to do it on a separate Excel sheet here. I was about to delete the wrong one. Well, that's funny. So, we are going to be doing exam 2, and then question 7. So there. Now we have gotten their instructions. You have to do this stupid crap. Hey, stop. Man, this is such a giant question that it's going to be kind of hard to read it if it's like this. But it's readable, still readable. So. I mean, I should be able to fit everything over here. So yeah, that was funny. That was funny. That was funny. That was funny. I was saying that was funny because me saying that was funny was funny. That was funny. Oh man. So now that we've copied and pasted the question, that'd be funny if this thing timed out and it lost all my work. Hopefully not. Like, imagine if it loses all my work just because I left it sitting here too long or something. Just imagine. I'm just saying that because I might have to leave here. So we just have this one last question. I just love how this is not even our whole exam. This is part of our exam. I guess it's kind of nice of our professor that over half of our exam is take home, but it results in a lot more questions. So that was fun, dude. Man, how's our exam gonna go on Monday? Oh man, it's gonna suck. Oh my gosh, because like part A of this was so hard, even though it was I had open book and I had 2 attempts. It was still so hard, and I still managed to only get less than 90%, which is below average for the class apparently. I don't know how the rest of the class managed to do so well on that. How? Just how? Maybe they actually put some effort into it because they had an open book. Whereas I didn't put as much effort in. I just tried to guess on a lot of the questions, kind of. Man, can I please do this question? Married, together, have $100,000 of salaries. This year they've recorded the following expense. Right. You know what's hilarious about this? This isn't even from chapter 7, 8, or 9. This question covers like a bunch of previous chapters. Like, seriously? Thanks a lot, buddy. Don't you just love tax? No. I hate tax. It's so confusing. There's so many random rules and stuff you have to memorize. Do you really have to memorize? Like, how many accountants actually have all this stuff memorized? You know what's funny? In real life, you don't have to memorize all this stuff. You can refer to the tax law. You can refer to tax law whenever you want. You don't have to. You don't have to be like, oh, you're not allowed to have open book while you're on the job. You have to remember everything. But the problem is, it's inefficient because it's more efficient to just have everything memorized so that you can actually complete your work more quickly. So, kill myself. That was funny. How much of this can be deducted? Itemize and deduct 2021. Okay, so we have home mortgage interest. We have real estate taxes. We have state income taxes paid. We have medical expenses unreimbursed. We have employee business expenses unreimbursed. We have charitable contributions. Cash to their church. Contributions to retirement. Karen regular IRA $5,000. And on this day and wait, why would you include something in 2023 if we're trying to calculate taxable income for 2022? It's in 2023. Why would you include that in 2022? It doesn't make any sense. Chad, 5,000 in 2022. 2021, they itemized and deducted. Oh, no, I hate this type of question. It's like, oh, no, what? Oh, I'm going to die. They really had to do this. Stinking refunds. Dude, I think this has a consistently weird kind of signature. Let me count. Oh, I can't. It's 11. It's 11 beats. They have 3 groups of 3 and then a group of 2. Okay, if you count this, it's 1, 2, 3. Yep, it's 11. How did it take me this long to realize that this song has 11 beats per measure? Well, not for the whole song. That was funny. Oh my gosh. They itemized and deducted $4,000 of state income tax. In 2022, upon filing the 2021's tax returns, they got the federal refund of $250,000 and the state refund of $2,000. Oh no, oh no, oh no, oh no. And this has to be counted in gross income, basically. Something has to change in gross income. It's so hard. How? How do you do that? No, 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 no. How? Okay, where am I going to find this? It's going to be in this section, isn't it? It's possible I could just include the entire amount of the refund, but I don't want to risk getting that wrong. There are certain scenarios we don't include the whole thing. There's a certain amount of tax benefit received from the overpayment. There's a $350 tax benefit received, so there's $350. Okay, so she overpaid in 2021 420, received a benefit of $350. Okay. That was now funny. So she received a $420 refund of her Ohio income tax in June of 2022. How much of the $420 refund is required to include in gross income? Her itemized deduction for the $420 of state income taxes that she overpaid last year. Reduced her taxable income by $420. Because she received a tax benefit. Scenario A, itemized deductions were $15,500. Oh, dude, it's so hard. How do you calculate that? You do itemized deductions, the greater of, okay, you take the itemized deductions, itemized deductions adjusted for the $420 refund. Compare that with the greater of 2 and 4. So basically, let's say that here's what you do for this. What you do for this is, let's say their total deductions for the year was $25,650. Okay, let's see. They are married filing jointly. We need to look at the standard deduction for married filing jointly. Oh, but we need to look at the 2021 rate. Are you kidding me? Wait, I think I have the 2021 rate. Dude, he's literally making us look up standard, a deduction, married filing jointly 2021. 25,100. I thought that was. Wait. Oh, these are not the same. Okay, so we have $25,000, 25,100. We have compared with. So their actual deduction, their actual itemized deductions was going to be a total of $25,650. However, if it did not include the refunds, it would be $2,200 less, which would go underneath this. It would go underneath this amount, which is so basically. So basically, here we go. Scenario A. Itemized deductions. Itemized deductions would be going down to below the standard deduction. So therefore, yeah, but what if her deductions went from above to below it? Her deductions went from above the standard deduction. Her itemized deductions would have been not. Okay, only a part of it would be included. Okay, I think that it's relevant to this scenario because. No. Oh, wait, where's the one where it's partial? Scenario B. It was 19,150. It went from 19,150 to 18,730. So the reduction, it was this minus this equals 350. So that's basically what we're going to be doing here. We're going to be doing like this number minus the standard deduction for. It's going to be this number minus the standard deduction for 2021 for married filing jointly, and that will be the amount of income recognized from the refund. This is ridiculous. Wow. So they won't recognize the full amount of refund. They will only recognize the amount of refund that benefited them last year as income. That's how it works, apparently. Like, if we look at this, to the extent that the prior deduction produced a tax benefit. So I've kind of worked, well, it's not working ahead because I need to figure out what is gross income at first. I need to figure out gross income. $22,250. It was, so basically the amount of refunds is going to take it below the standard deduction for 2021. It's going to take it from 25,650 to below the 25,100. So the amount that this 25,650 exceeds the standard deduction. Okay, so income recognized from refund. Is going to be 25,650 minus, it's going to be 25,650 minus 25,100. Why was that so freaking complicated? We are on the right track. That was funny. I just spent how much time did I just spend just trying to account for this thing right here? It literally took me 5 billion years to get this right here. Okay. Salaries is going to be, okay, this is getting a little ridiculous here. What we're going to do is we're just going to expand this a bit and then make this merge cells and there. And then we'll move this up to here. That was funny. So salaries, they have total salaries of 110,000. That's funny. That was so funny. That was so funny. That was so funny. Funny. Their total income, their total gross income is going to be this plus this. Because gross income is going to be equals this plus this. So there you go. We have our gross income. It took 5 years to calculate gross income. We now need the 4 AGI deductions. What is going to be a 4 AGI deduction? You know what I'm going to do? I am going to how much of this stuff is going to end up being a deduction? Home mortgage interest? Is that going to be a deduction? Unreimbursed employee business expenses. We are going to have we're going to have another column that's going to list all these other things: home, mortgage, interest, real estate taxes, state income taxes, medical expenses, employee business expenses, charitable contributions. Contributions to, let's see, regular IRA, Roth IRA. Karen, regular IRA. I don't see why you need to include the 2023. Why would that be included? Why on earth would that be included? That doesn't make any sense. It's in the next year. Chad, Roth IRA. Okay, I have listed every single possible thing that could be a deduction. I have listed every single possible deduction that could possibly be made in the entire world. That was funny. Mortgage interest. Home mortgage interest. I don't know where that's going to be. I'm just going to look it up. I'm going to is home mortgage interest and then when I see the answer, I'm going to look it up in the book. According to this thing, it says it's deductible if the proceeds of the loan were used for business, investment, or other deductible purposes. Oh, so oh my gosh. What? You had me scroll all the way down here. There is so much stuff here. No, this is not what I was looking for. Dang it. Wait. Is this going to be a 4 or is this going to be an itemized deduction or no? It might be itemized. Wait. it looks like it's itemized deduction. So therefore, since it's an itemized deduction, I'm going to be looking in the chapter that deals with itemized deductions. And it might be even this chapter here. No. Where the heck is it? Okay, so it looks like interest is going to be in itemized deduction here. So I found the section dealing with this. We are going to read this carefully, that was funny, to see if we can deduct the entire thing as an itemized deduction. Oh my goodness. But first of all, and also, how the heck would I be able to do this without... How the heck would I be able to do this without using the textbook to help? Like, seriously. This is impossible to memorize all this. There's so much information here. How could I possibly have just known this? See, when I was doing this, I had no idea. Like, what was this one? I believe... Okay. Acquisition debt of $300,000. Deduct interest paid on acquisition indebtedness secured by qualified residents. Taxpayers may only deduct mortgage interest on up to $375,000 if married, let's see. Acquisition debt of $300,000. It falls below the limit here of $750,000 and $1 million. So it looks like it's fine. So basically, during the year she paid this much. So I think we can deduct the whole thing as an itemized deduction. So we have 16,640 itemized deduction. Itemized deduction. One down. 1, 2, 3, 4, 5, 6, 7 to go. That was funny. Real estate taxes, I believe, is an itemized deduction, but I'm going to check. Is real estate taxes an itemized deduction? So I believe it says here real estate taxes. So I believe I can deduct the full real estate tax, but there's some kind of limit here. The limit is going to be limited to $10,000, and it's not even close to the limit here. But okay, so we have some taxes, we have some state taxes, but we have to limit it to a certain amount of taxes. So what I might do is combine those two cells into one cell and just say $10,000 total, because it goes over $10,000 and you can only deduct $10,000. So it says income taxes, which it says state income taxes, and then real estate taxes on property held for personal or investment purposes. State. So this is going to be a real estate tax and a state income tax. We're going to actually combine these two into just one, which is going to be taxes. So state and local taxes, we're going to say $10,000 because it's going to be this plus this, but it goes over 10,000. I mean, it's this plus this. That's funny. Itemized deduction. That was funny. We have now completed another 2. Medical expenses will be an itemized deduction. However, it will be limited to a certain amount. It's going to be limited. Now it says that they are medical expenses unreimbursed. What you're going to do is, where does it even say that? Seriously? It's limited to any amount over a certain percentage of AGI or something. Total qualifying less insurance reimbursement equals this. However, where are they going to do the stinking calculation? Where are they going to do this? Okay, so what you do is you have this number minus 7.5% of AGI. You subtract 7.5% of AGI. You have your total amount, and then you subtract 7.5% of AGI. Now, we have not calculated AGI yet, so we're just going to skip it for now. That sucks. Employee business expenses. Like, look at how complicated this is. Like, really, you expect me to... Like, basically, I had to do this exact type of problem in, like, 15 minutes once for a class. Like, seriously, look how long this is taking. Employee business expenses. Is that going to be 450? Wait, is that going to be... It says unreimbursed employee business expenses are not deductible. Unreimbursed employee business expenses are not deductible. That's what it says. I'm reading this exactly as how it's stated here. It says unreimbursed employee business expenses are not deductible. That's what it says. Therefore, I will say not deductible here. Charitable contributions. It's not even going to get remotely close to the amount. Itemized. I think it's itemized, right? The charitable contributions are limited to what? It's like 60%. I'm just going to say 60%. I'm pretty sure 60% of AGI, but we haven't calculated AGI yet. IRA. I think IRA is actually going to be for AGI. Dang it. Oh, here it is. Okay. The deductible amount of the contributions Deductible contributions to traditional IRAs are for AGI deductions. Distributions from them are taxed as ordinary income. Early distributions, earned income. You gotta be kidding me. What about Roth IRA? Dude, this is hilarious. Thanks, Professor. That wasn't discussed. It says traditional IRAs. What about traditional IRAs? Is Roth IRA not going to count? Is contribution to Roth IRA? They are not deductible. It says they are not deductible. Contributions to a Roth IRA aren't deductible. So, not deductible. However, the traditional IRAs are going to be deductible. They are for AGI deductions. For AGI. So Karen, regular IRA. And guess what? She contributed $3,000 on the 2023. Why the heck would that be included? That doesn't make any sense. It's in 2023. I'm not going to question. I'm not going to. Okay. I mean, he had. I'm just going to record the 5,000 here, but it's not deductible. This is not deductible. The only two things left. We have calculated a single for AGI deduction. So all you do is take gross income, subtract for AGI deduction, and you get adjusted gross income. Right? That's it. We're done. We've gone through everything. Not exactly, but so for AGI deduction is going to be just one, which is the regular IRA. That's literally the only thing listed. So AGI is equal to this minus this, and we have AGI. We have calculated AGI, therefore we can calculate a couple of things. Medical expense deduction. Medical expenses are total of 8,800. 7.5% of AGI. 7.5% of AGI. So equals 0.075 times this. That means deductible medical expenses. Equals this minus this. You know what I'm going to do? That was funny. Save space. I'm going to save space. How about we save more space?